Hi guys, today we have a lot to cover because I just made a couple of major moves in my portfolio. First, I closed one of my positions in profit, extending our track record to 14 consecutive winning trades. With all that cash, I bought a new stock. In my last video, I said I would use your recommendation to choose my next buy between these 6 stocks. And I did. Well, almost. Instead of buying the top voted company, I actually went with number 2, and I will explain the exact reason why. We will also look at all the 7 stocks I'm holding right now, along with the year-to-date performance of my $250,000 portfolio against the market. Finally, I want your opinion again on a short list of 5 stocks that I'm considering buying next. Let's go! While I was on holiday, I asked you guys to guess which of these 4 positions I sold: Duolingo, HIMS, Adobe or Sanara. 1,833 people voted and only 15% got it right. I sold Sanara MedTech. Guys, for the 1000th time, I am a contrarian investor. I buy falling knives and I sell on strength, at least that's what I try to do. I can't believe 29% voted for my loved Duolingo. Instead, check out Sanara chart. Straight up. Last week, news broke that MiMedx wants to acquire Sanara for $35 per share. Similar to PayPal, I believe Sanara is worth more than $35. However, I'm happy to take the win, especially because it wasn't an easy ride. During the 12 months I held it, their telehealth platform completely failed. The CEO resigned, classic, and as you can see, I was down big every day for several months. But valuation-wise made absolutely no sense, so I waited, and last week I took a 20% profit, selling at 33.87. That makes it 14 consecutive winning trades since I started this channel. Now, 14 green trades, it's great, but I want to be completely honest here. I have color-coded them because some of these wins actually feel like losses to me. These light green trades underperformed the S&P 500. Sanara, for example, was a 21% gain, but over the same period the S&P went up 23%. PayPal was barely green while the S&P was up 8%. Instead, last year I made some great investment. This HIMS one was insane, but this year I've been struggling a bit, so I really hope that this new buy will outperform. In my last video, I asked you to leave a comment and help me pick my next stock. This channel is contrarian in everything, like Charlie Munger suggested.
It's constantly avert. You don't think of what you want, you think what you want to avoid.
Invert all the time. Other YouTubers tell you which stocks to buy. In this channel, you tell me what to buy. This is the final ranking. ServiceNow 179 points, SoFi 90, Netflix and Mercado Libre 81, Celsius 59, Oracle 26. ServiceNow won by a big margin, and when the stock dropped after earnings, I almost pulled the trigger. So, why didn't I? As the cynical Clit pointed out in the comments, my portfolio is already a big bet on software stock recovery. I own Adobe, Duolingo, Microsoft. For example, if we check the correlation coefficient between Adobe and ServiceNow, it's 0.91. Basically, they move together. If Adobe or Duolingo drop because of AI fears, ServiceNow will drop as well, so buying now wouldn't have diversified me enough, it would have just tripled my bet on software, taking too much risk. SoFi, on the other hand, ranked second, but it's crashing on interest rate hike fears. As you can see, over the last 2 years, it has a negative correlation score to Adobe and Duolingo. SoFi goes up, while Adobe goes down. Their earnings were impressive, with strong 34% revenue growth, 34% members growth, but the stock dropped. I entered right here at $15 on this technical support level. I took a screenshot to remember, bought 2000 SoFi, limit order 14.93. That is almost a $30,000 investment, making it immediately my second biggest position at 13% of my portfolio. This huge slice is Duolingo, this 17% is cash, and the next in size is my bet on SoFi. It's worth noting that I wasn't always bullish on SoFi. I made a video around 1 year ago where I was actually quite bearish. The current $30 price, it's not a bargain for the significant economic and competitive risks you're taking on. For the stock to go to $100, everything has to go right. For it to drop back to 15, 20, only a few things has to go wrong. SoFi investors focus on growth, which is incredible, but for me, the risk-reward balance is not attractive at the current price. Now the situation is very different. Even without diving deep into the business details, we can see that over the last 12 months, revenue is up, operating margins are improving, clean balance sheet, yet SoFi is trading at half its previous valuation. Many people see the PE ratio of 32 and conclude SoFi is expensive. I see it differently. My assumption is that margins will improve over the coming years, and the CEO, Anthony Noto, is saying this.
And we're still posting 30% EBITDA margins and a net income incremental margin of 30%, which is where we think our net income margin can get to over time.
Even if we consider a more conservative 24% normalized margins, the current PE ratio will drop from 32 to around 18. And then we must factor in growth. The current 34% growth is insane and probably unsustainable long term, but my indicator, price to 5 years forward earning power, is around 8, making it the cheapest of the 6 stocks we voted on. Of course, there is more to investing than just one metric. For example, this ratio doesn't account for risk, so always consider every other factors like the company's moat, the management quality, potential dilution, debts, and other problems. Anyway, I'm not here to lecture anyone, let's look at my current portfolio. Duolingo, Cash, SoFi. Unfortunately, IMS dropped recently, so it's down to 11% of my portfolio. Next is Adobe, a 10% position. Why did so many of you think I sold it? I might consider selling if the price spikes, perhaps when they will announce a new stellar CEO, but otherwise, I'm holding. Next is Novo Nordisk at 8% of my portfolio. Friday shares dive after Heart Medicine fails trial, dealing another blow to its pipeline. I don't care much about short-term news like this, I'm waiting for the earnings call on Wednesday. On the bright side, Microsoft had great earnings last week, sitting at 8% of my portfolio. Finally, the last 6% is Booking.com. Currently, 5 of my holdings are up between 10 and 20%. Novo Nordisk is basically flat, and Adobe is my only losing position. After taking a small profit on PayPal and Sanara, my year-to-date returns look much better. I'm up 14% versus the S&P 7-8%. July was very sweet with 13.4% returns. Now, for the big question, what should I do with my 43,000 in cash? Here are 5 companies I'm looking to buy. Check the pinned comment below if you want to see the live ranking results. Please vote for your favorite. By the way, I'm tracking the performance of all your recommendations. Viewers who voted for ServiceNow last time are currently winning this mini challenge. But I will keep tracking the results over the coming years to see who will be the real winner. This week's choice is between 5 stocks. Stock number 1, Uber. The stock is down 30% from its highs. Is it finally time to buy? Stock number 2, Reddit. Price dropped 20% on Friday despite a double beat, down 50% from its highs. It's the only social platform I use, so I'm tempted. Stock number 3, Nebius. I don't have much AI exposure and this company keeps popping up in your comments. I'm hesitant since it's not a contrarian bet, but it has pulled back quite a bit lately. Stock number 4, Nike. This is extremely contrarian, down 77% over 5 years and keeps dropping. Investors are desperate, but do you think it will turn around? Last choice, Meta. With my valuation system, Meta keeps coming up as the best buy among the Mag 7 and one of the best buy in the entire market. I would love to get it even cheaper, but I'm afraid I might be a bit too greedy. So, this is my short list for this week. Cast your vote. Remember, 1 comment equals 1 point. I will keep the pinned comment updated with the live rankings, so please tell me what you think. I read and reply to every single comment and I really value your opinions. Thank you for watching until the end. Like, subscribe, hype. See you next time. Peace out.